Alright, I'm going to start reviewing over some of the things that you have to do for your comprehensive problem project. What we are going to do is we are going to work an example problem, and I'm going to go through and work part of this problem to show you exactly what I expect out of your project. What you're going to do to look at this video with me, you need to go into Blackboard. You need to go into the Comprehensive Problem Example tab, and then go in and print the comprehensive problem and the working papers to use with this video. Okay, so there's two things you need to print: the comprehensive problem as well as the working papers. We are going to be using the general journal working papers for this particular video. What it should look like is what you have on your screen. You'll notice that it gives you the chart of accounts. These are the accounts that you are going to use for this particular problem. These are the only accounts you're going to use for this problem. You're not going to create any other accounts. The other things that you see after you get through, looking at all the accounts, the other thing I want you to notice, all the assets are listed one after another. The liabilities are listed. Owner's equity. Then you get to revenue, then you get to expenses. They're all in account number order. So that's what you're going to be looking at here. Then at the end, what you'll have is you have the transactions. And so for the first page, you only have 2 transactions on it. The next page is going to have all the other transactions, and this would be stuff that would be for chapters 1 and 2. So what we're going to do is we're going to go through, and I've got it set up to where I've got some of the transactions along with the journal entry page so that we can go through and work some of these different journal entries, and you can see how that actually works. Alright, so in looking at this, we have June the 1st. So what we want to do is we want to come over and we want to put June 1st in the date column. It says Curry deposited $95,000 in a bank account for the purpose of buying Wind in Your Sails, a business offering the use of small sailboats to the public at large indoor pool with a fan system that provides the wind. So it's saying that he is depositing $95,000 into the bank account. This means that our cash is increasing, so it's going to go on the top as our debit. And so we would have cash for $95,000. The next part of this is, why did we get cash in? Well, Curry, who is the owner, deposited it. So that is going to be a capital contribution from Curry. So it would be capital for $95,000. The next entry is on June the 2nd. Now you need to skip a line between entries. I'm not making you do explanations, so you don't have to worry about the explanation, but you do need to skip a line between your different entries. That way that it's not all mumbled up. So it bought Wind in Your Sails in its entirety for a total price of $216,100. The assets include a sailboat, fan system, pool structure, and land. So those are assets. Remember, when we increase assets, we increase assets on the left. Now it also states that he actually paid and put a down payment down for $60,000. So that's going to be cash, and that cash balance is going down, so it would be on the bottom as a credit. And then he signed a mortgage note for the remainder of this. Okay, so signed a mortgage note, which is a mortgage payable. So what I'm looking at first are all the assets. So we have sailboats, and the sailboat was at $25,800. We are going to have a fan system, and that's at $13,300. $300. We will have a pool structure. And that's for $140,000. We also have the land. And the land is valued at $37,000. We are putting cash down in the amount of whoops, I got it in the wrong place. $60,000. The other part of this entry is going to be that mortgage payable. And that amount is going to be for $156,100. All right, and the way that we get that is we take the total of all the assets and we would add all of those up. Then we would subtract out the $60,000, and what we would end up with would be the $156,100 would be what that mortgage payable would be. And so that's what we look at for that second entry. All right, now we get to the third entry. It says that we received and paid. So the key word here is paid. Paid means cash for newspaper advertising. So if you go and you look at your expense sheet, you will find that there is an advertising expense on it. And so this would be 6.3. We have advertising expense, and it would be for $350. And again, paid means cash. Cash is going out, so it's going to be on the bottom as our credit. Number 3, received and paid a bill for a 1-year premium for insurance. Now we're paying for a 1-year premium. That means that we are prepaying for our insurance. This is not for this month. This is for the whole year. So this is going to be an asset, and it's going to be a prepaid insurance. It's going to be the account that we're going to be using. Again, we're paying for something, so cash is going out, and that's why that cash is on the bottom and is our credit account. Number 3, bought additional boats from Lewis Manufacturing Company for $7,200, paying $3,200 down with the remainder due in 30 days. So in here, again, is cash involved? Yes, we were paying something, so that's going to go down for that $3,200. And what are we doing? We're purchasing more sailboats. Remember, sailboats are an asset. When we increase assets, they increase on that left side. So the other entry that we have here for the third, we are going to be purchasing these sailboats for $7,200. We're going to put a cash down payment down, so that's going to be our credit for $3,200, and then the remainder of this is going to be paid within 30 days. If it's going to be paid within 30 days, that's part of an accounts payable. So we are going to be looking at our accounts payable account. And that is going to be for $4,000. Now there's some things that I want you to see here. One is you will notice that your debits start out and then you indent over for all of your credits. I have all of my debits first, and then all of my credits would be second, and you notice they kind of line up, and they're all indented over. So those are some of the things that I do want you to realize when you're doing your journal entries, that your debits are going to be over, and then your credits are going to have to indent over, and they all should. Your debits and your credits should line up. The other thing I want you to see is that my total number here for my debits. Now these are what we call what? These were the simple entries because we only had one debit and one credit. This one is a compound entry because we have one debit and two credits. What we have to make sure is that in a compound entry, our debit amount equals our credit amount. And in this case, you see it does. All right, they both are for $7,200. So those are things that I want to make sure that you understand and you're realizing is that, in a simple entry, it's pretty easy. They're both the same thing. In a compound entry, you have to make sure that your debits do equal your credits. All right, the last, not the last one, the next page, there's a lot of things that happened on June 3rd. We signed a contract with a vending machine service to lease space for vending machines. The rental income agreed upon is 10% of the sales generated from the machines, with the estimated total rental income payable in advance. And what we are estimating right now is that we're going to receive an estimated cash payment for $150. So we are receiving cash. So again, we are receiving cash. So we do want to look at that and what we are actually getting in here. So we're receiving cash. So that means that cash is doing what? All right. That means that cash is increasing, which means cash will be on the top. So we are receiving cash. It is going to be on June the 3rd. And so what we have here is we are receiving $150 in, and it is going to be for concession income. All right, so this is what it is. It's a vending machine service. We are providing them with space to put their vending machines, and they're agreeing to pay us 10% of what they make. And so we're going to call that concessions income. For $150. The rent, all right, here is received a bill from Quick Printing for promotional handouts, $540. And it gives us a hint there. It says that it is advertising expense. Now you'll notice it just says that we are receiving a bill. It nowhere does it say we are actually paying this bill. So this is actually going to be an accounts payable item. So we do have to analyze this because we have an expense and we have an accounts payable. So with advertising expense, that is an expense, right? What do we do with expenses? Well, expenses increase on the left side. That means my expense is going to be my debit. For accounts payable, that is a liability. Liabilities increase on the right side as a credit. So for this particular entry, remember we skip a line between entries. What we're going to have is advertising expense. It's going to be our debit for $540. And our credit here is going to be for accounts payable. And that's going to be our credit for $540. The next one says we signed a contract for leasing sailboats from K. Einstein Boat Company. We paid the rental fee for June of $700. Now we are in the month of June, so we've signed a contract. If we had just signing a contract, no entry required for signing the contract. However, we are in the month of June and we are paying the rental fee for June. So that is a current expense for the month that we are in. So what we're going to do there
is that is going to be a sailboat rental expense. If we look at our chart of accounts and we find this. So again, we see the word paid. Paid means cash. Cash is going down, so it's going to be on the bottom, which means it's our credit. So that means that our expense will be our debit. So we have sailboat rental expense for $700. And then we're going to have cash is our debit account for $700. So that does those entries. The next set that I want to look at, we paid cash for miscellaneous expenses, 104. So again, you see the key word there is the word paid. So that means that cash is going to be going down, so it is going to be on the bottom. And we paid miscellaneous expenses, and that is for June 5th. So we would have miscellaneous expenses for $104. And then we would have cash as our credit for $104. Received $2,855 in cash, so that means that cash is doing what? It's going up, so it's going to be on the left. It is going to be our, sorry, I keep hitting the next button. It is going to be our debit account. So we will have on the 8th, we will have cash coming in of $28.55. Now why? Why is cash coming in? Well, because we have income. Somebody's used the boats at this point. We have income. In the chart of accounts, this is called income from services. So we do have to look at our chart of accounts and see what accounts our chart of accounts says that we need to use. This would be normally like service revenue or fees earned, but this chart of accounts is calling it income from services, and so that's what we're going to use. Then we get to the 9th. Bought an addition for the fan system on account from Start Pool Company. So we bought an addition to the fan system on account. So this on account, remember, it would either be accounts receivable or accounts payable. In this case, we're purchasing something, so it's going to be accounts payable. And we're purchasing the fan system, which is an asset. So that's on the 9th. So we'll have fan system for, $745. And then that would be accounts payable for $745. Then we get to the 15th. On the 15th, paid wages to employees for the period ended June 14th. If we look at our chart of accounts, it says wage expense. So that was going to be a wage expense. We have paid this. So since we've paid it, we are paying it with cash. Cash will be on the bottom because cash is going out. And that's for $3,900. And then, let's see, we paid on account for promotional handouts already recorded on June 3rd for $540. So this is where we've already recorded it. It is in our accounts payable already, and we're actually going to be paying it, so cash is involved. Cash is going out, so that means the cash balance is going down. It'll be on bottom. So our two accounts here on the 16th are going to be accounts payable and cash, and that would be for the $540. Is what we would be looking at there. The last one I want to look at is Curry withdrew cash for personal use. So we have cash here and we have the personal use. So when we look at this particular entry, what you're going to see is it would be on June the 16th. It is going to be looking at the withdrawal account, which in this case is drawing. And it is our cash, and it is for the amount of $2,500. All right, so those are the entries that I wanted to look at today. The other entries, I would like for you to go through and try to figure out what the other entries are going to be on this, and I will post the answer key to the rest of the entries along with what we have done so far will be posted out there on Blackboard. And it's actually, I've got what we did in class, regular journal entries, that goes through the 16th. And then I've got regular journal entries answer key. And this is what they all should look like, so you can compare what you have versus what it should look like. And then if you have any questions, you can just get back with me.